Tax increment financing is a tool used to fund urban renewal projects to attempt to increase the value of properties in a particular area. It directly affects property taxes. Very few people understand what tax increment financing is, and fewer still understand how it works. In our ongoing efforts to educate citizens about property taxes, the North Dakota Policy Council presents We will break the video down into 3 sections: urban renewal, tax increment financing, and how TIFs affect property taxes. To understand tax increment financing, you really should have a basic understanding of urban renewal law. In North Dakota, when a city finds that there are slum and blighted areas which they believe is a problem and injurious to the public health, safety, morals, and welfare of the community, the city can pass a resolution declaring such. After declaring a specific area blighted, the city creates what's called a workable program for utilizing public and private resources to develop commercial and industrial properties and eliminate blighted areas. The city adopts a resolution stating that the area in question consists of a slum or industrial or commercial property and designates the area as appropriate for a development or renewal project. After the resolution has been adopted, it must hold a public hearing to discuss the renewal plan. The city then must approve a renewal plan if it finds that a reasonable method exists to help families who have been displaced, the plan conforms to the plans of the city as a whole, and the plan provides for a maximum opportunity for development to be carried out by private enterprise. Urban renewal law gives vast powers to the city to carry out this plan. It can enter into contracts, arrange contracts, and execute contracts with any public or private entity to improve infrastructure, acquire property, borrow money, force the repair of private buildings, and others. To pay for the renewal plan, cities may issue bonds to be payable solely from the income derived from its connections with the plan. Keep in mind that these bonds do not count against any legal debt limitations. If it wishes, the city can give its urban renewal powers, minus a couple of them, to an urban renewal agency, which is its own corporate entity consisting of 5 unpaid members appointed by the mayor to 1-year terms. Once a renewal plan is in place, the city has the option of using tax increment financing to pay off any expenditures associated with carrying out the renewal plan, including paying off bonds and interest. Tax increment financing can also be used to assist developers develop commercial and industrial properties, as long as there is a public hearing. When the city decides to use tax increment financing, it requests the county auditor and treasurer to compute and certify the taxable value of each lot and parcel of real estate in the area, as last assessed and equalized before the date of the request. From then on, that value is frozen. The next time those properties are assessed, any increased value in those properties is considered incremental value. If there's incremental value, the property taxes paid on that incremental value do not go to the city, county, school district, and park board coffers. Rather, the tax increment property taxes paid go into a tax increment fund, or a TIF account. The TIF account is used to reimburse the expenditures used to carry out the renewal plan and redemption of premiums paid on bonds, notes, or other obligations. When the cost of renewal of the area has been fully paid, then any balance left over is proportionately given back to the other taxing entities, such as the city, county, school district, and park board. Tax increment financing was originally sold to governments around the country as a way to renew slum areas. As I mentioned before, it's part of urban renewal law in the North Dakota Century Code. However, since then, laws have been added to the Century Code that broaden the instances that government can use tax increment financing. Most governments that use tax increment financing now use it not to renew slum areas, but to boost property values in a TIF district. If a certain property has not gained value over the course of several years, the City Commission can hold a public hearing and approve a renewal plan for that property. Tax increment financing negatively affects everybody's property tax bill by taking the tax revenue from increased taxable valuations on the properties in the TIF areas and putting that into TIF accounts. Look at it this way. Let's compare two cities. For the sake of this video, we'll call them City A and City B. City A does not have a TIF area, and City B does. It just so happens that they both have budgets that are exactly $500,000. City A collects property taxes from all properties located in its corporate limits. The amount each property is taxed is proportionate to its assessed value. City B collects property taxes from all of its properties. However, the $50,000 share from properties located in the TIF area was put into a TIF account. This means that that particular $50,000 cannot be included in the city's general fund budget, so the rest of the property taxpayers will have to make up the difference. In other words, the general property taxpayers are subsidizing the development costs of the properties located in the TIF area. In this hypothetical scenario, property taxpayers in City B would have their property taxes 10% higher than they need to be. Counties, school districts, and park districts also lose out on this too. They're forced to keep everyone's property taxes high to subsidize the development of properties in the TIF area. This is a map of Bismarck's TIF area. Notice it encompasses most of what would be considered the downtown area. Why should all of the property taxes paid from property owners in this area be paid to the general fund, and only a portion of property taxes paid by property owners go to the general fund in this area? If tax increment financing and urban renewal projects are always taking place, then they must have a perceived benefit, right? Well, these projects are typically sold as a way to clean up blighted areas downtown, increase safety and walkability in urban areas. However, they can easily become slush funds used for political purposes. It's a good way for political leaders to funnel money to favored developers. That is especially true considering the mission creep I talked about earlier. A friend of the city might own property that's struggling. Through his friendships with the city commission, he can simply get the city commission to approve a TIF plan to get taxpayers to subsidize the redevelopment of his property. Similarly, politically favored developers may make it a common practice to seek these properties out and purchase them with the understanding that their buddies in city government will get taxpayers to subsidize the redevelopment of their purchased properties. The argument is often made that it's perfectly fine to take the tax increment money and set it aside in a special TIF fund because without urban renewal plans and tax increment financing, the development would not have taken place and the increases in taxable valuation would not have occurred. If that's the case, then why shouldn't an entire city be made into a TIF area? Then everyone would be able to use their own property tax dollars to fund the remodeling of their house or fix their sidewalk. What's good for some should be good for the rest. We've taken a closer look at tax increment financing. While you're not quite an expert, you do know the basics. The next time your city attempts to renew its downtown area by using tax increment financing, you'll know that it just means higher property taxes. If you'd like to learn more, visit our website at www.policynd.org. For the North Dakota Policy Council, I'm Jacqueline Dotsenrod.